Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
This week's economic calendar is packed with key events that will shape the market dynamics. The highly anticipated Nonfarm Payrolls report on Friday and the release of the Federal Reserve's June meeting minutes on Wednesday will be the focal point in a week shortened by the holiday. Additionally, the Reserve Bank of Australia will announce its latest rate decision, while China's PMI data is expected to highlight the need for additional stimulus measures. Don't forget to stay until the end, as we will share our technical analysis on foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, last week traders adaptively maneuvered through a dense economic calendar, with global inflation figures and central bank decisions taking center stage. The initial half of the week saw intense focus on central bank rhetoric, including surprise moves by the People's Bank of China and efforts to curb yen declines. As the week progressed, several central bank leaders delivered hawkish remarks, emphasizing divergent policy plans and injecting a sense of risk-off sentiment into the market. While USD pairs started the week in a lackluster range, leaning bearish, the US currency quickly capitalized on risk aversion and renewed expectations on Fed tightening. The Federal Reserve Chair Jerome Powell commented on potential interest rate hikes, driven by a robust labor market, boosted by the greenbacks midweek. However, the currency retraced some gains after a report indicating a further slowdown in inflation rates. Shifting to digital currencies, traditional finance firms are finally acknowledging the longevity of digital assets. Recent announcements from premium financial players, including BlackRock, the world's largest asset manager with $9 trillion in assets under management, filing for permission to build a Bitcoin-based exchange-traded fund, signal a changing landscape. The United States Securities and Exchange Commission, historically resistant to such ETFs, makes BlackRock's moves particularly noteworthy. Could BlackRock's EFT launch propel Bitcoin prices to new heights? Now let's delve into what's making headlines on Wall Street. Despite a banking sector crisis and concerns about a recession, the US stock market has rallied in the first half of 2023. The S&P 500 has risen 15.9% since the beginning of the year, while the tech-heavy Nasdaq has experienced a 31.7% increase, making its largest first half gain in 40 years. We have had a pretty resilient market in the first half of the year. The market needs one big question answered though, and that is, what does the economy look like in the back half of the year? Traders are optimistic that the stronger first half gains will provide a tailwind for the market in the second half. However, this month will bring several market moving events, including the job reports on Friday, the start of the second quarter earnings season, and a crucial inflation report next week, all leading up to the Fed policy decision on July 26. Moving on to commodities. The bull thesis for oil in the second half relies on expectations of resilient production cuts by major producers Saudi Arabia, with the aim of pushing Brent above $80 a barrel and the US West Texas Intermediate to at least $75. WTI ended the second quarter down almost 7% and the half year 14% lower at $70.64 a barrel, while Brent finished the quarter about 6% lower and the first half almost 13% down at $74.90. Despite 3 production cuts announced by Saudi since October, crude prices have only experienced brief rallies after each announcement. A rate hike by the Fed and other central banks have become a major factor impacting the oil market. Concerns about a global economic slowdown that could impact energy demand further amplify these worries. Lastly, let's turn our attention to bullion. Gold has shown a gain of about 5% in both futures trading and the spot price of bullion at the halfway point of the year. However, it holds on to the 1900 support level is weakening due to fears of additional rate hikes by the Federal Reserve. The front month August gold contract on New York's COMEX settled at $1,921 an ounce on Friday, while the intraday low of $1,908.15, hovering just above the 3-month bottom of $1,960. Although Friday's gold rally was fueled by the modest growth in the headline inflation reading of the PCE Core Price Index, which includes food and energies, continued to exhibit annualized growth of above 4%. The Fed closely monitored both headlines and core PCE to inform its interest rate decision. Now let's move on to the much awaited technical analysis for the day. First, we'll examine Euro-AUD, followed by the DAX, and conclude with crude oil and gold. Remember to consider these technical analysis scenarios in conjunction with other relevant indicators and analysis tools, and exercise caution by conducting thorough research before making any trading decisions. Starting with Euro-AUD. The Aussie sold off from the primary resistance level last week and is currently undergoing a correction on a larger time frame. If there is a close below 1.636, this correction could extend down to 1.625. Shifting our focus to the DAX. Germany 30 rallied on Friday, breaking through the primary resistance that now turned into support. A close above 16,220 could further extend this rally up to 16,300. Now let's turn our attention to crude oil. WTI is currently trading within the primary resistance zone. If there is a close above 71.5, this rally could extend all the way up to 73.5. On the other hand, a break below 70.1 could lead to a correction back down to 68.5. Lastly, let's explore gold's analysis for today. The yellow metal rallied from the primary support at 1900 on Friday. A close above 1921 could fuel further bullish momentum, pushing the price up to 1930. Keep in mind that today and tomorrow are public holidays in the USA, resulting in decreased trading volume for this specific commodity.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.